In this video, I'm going to try to demystify the concept of stock trading from this scary monster into something that's very simple and actionable. I'm going to lay out an easy blueprint that anyone at all can follow, regardless of your professional background and regardless of your exposure to these type of markets. I believe many of you don't know that I trade stocks, and I take the blame because most of the content I've created here on YouTube has centered around Forex. I hold a certificate in finance from the Ghana Stock Exchange, and I'm well versed in the matters of stock trading. In fact, last year, stocks were the second most profitable asset in my portfolio. So don't worry, you are in safe hands. By the time you're done watching this video, you would have had the necessary skill set to make your first purchase. Is it going to be Google, Alibaba, Amazon, or Tesla? Let's get started. Owning a stock is just like being an owner of a business. In order for your business to thrive, you need to get positive cash flow. You need to get income. And where is this income going to come from? It's going to come from your customers, the product you sell to your customers. Now, for your customers to be able to consistently buy from you, they need purchasing power. And where is this purchasing power going to come from? It's only going to be possible if they are gainfully employed. So, employment is critical for your customers, just as your customers are critical for your business. Now, for your customers to be gainfully employed, it means that they need to have a country with a strong economy. The strong economy is going to ensure that there are abundance of jobs for the populace. So, in order for us to assess properly the company we want to invest in, we need to first look at the economy. The most important metrics to assess the strength of the economy is the GDP and then the jobs report. For a country's economy to be strong, it means that the GDP rate, that's the rate at which the economy grows, has to be in the positive. So when you see any figure that is in positive, it means that the economy of that country is generally strong. And then for jobs, you need to see a job rate lesser than 8%. Once you see something like that, it means that generally the economy is strong. If we check these economic figures on tradingeconomics.com, we would find out that the US economy grew by 4.9%. And then the unemployment rate was at 3.7%. It means that the US economy meets the criteria, our criteria for a strong economy. Once you ascertain the strength of the economy, it's now time to look at the industry or the sector. So you have to look at the industry or sector which has a lot of demand. So for instance, during 2020, at the peak of the coronavirus pandemic, pharmaceutical companies and biotech companies were making lots of money because people were clamoring for vaccines. Now, the third criteria we are going to look for is the company itself. So we want to find out whether the company is being run well. Do they have any new exciting products? Who is the leadership behind the company? Etc. etc. The last but certainly not the least criteria is timing. Timing is everything when it comes to investing. During certain times of the year, some stocks generally don't do well. So your job as an investor is to be able to buy the stock at the best possible time and most importantly at the best possible value you can get. With this blueprint that I've laid down, investing in any stock whatsoever shouldn't be a big deal. In the subsequent stock investing series, I'm going to talk about how to swing trade stocks profitably. If you found this content insightful and educative, then kindly do me a favor and share this link to whoever you think would benefit from this content. Also, do subscribe and then hit the like button so that the YouTube algorithm recommends this video to more people who are just like you. Thank you.